Hey yo, what is going on with the viewers of the tube? If you didn't mean to land on this channel, do not click away because you just entered the crypto channel that will surprise you when you least expect it, like at a red light.
You okay? What's wrong?
It's my knee.
Did you come from the hospital?
Yeah, but I had to go pick up my moped. They did an x-ray my knee, but I probably should go back and have an x-ray of it.
What's wrong with your face?
I face planted.
Wow. You need to go back to the hospital.
I gotta tell my dad this is his exit up here. 26. You tell him he's the guy behind me. Oh, okay. I gotta go.
You know our American healthcare. It's time for Chico Crypto. First, if you saw this sweet sweater, I want to say thanks to Upper Park Clothing here in Chico, Cali for the gear care package. You gotta support local in times like these, and these guys are Chico born and raised. A link for their gear is in the description, and they take Bitcoin and crypto for payment, by the way. So to begin with the content, what do you know? Chico called it spot on once again. Oil is crashing. Black gold is turning to black dust. Pulling out the 5-day chart, oil has sunk from the above $18 mark at close last week to off the charts, basically nothing. Dollars and even cents on some exchanges. What did I post on April 3rd, 2 weeks ago? My plan B was this: short oil and buy Bitcoin. And pulling out the oil price chart since then, booyah, called the oil peak at $29 around there on 4/3. And that trade was possibly the best call I have made in the history of my dive into the world of financials. So what the hell is going on? I thought the Saudis, Russia, and the US came to a deal to cut production. And how will the destruction of these oil markets affect everything from stonks to Bitcoin? Well, first, those oil prices have fallen to the lowest levels ever, going all the way back to 1946, even before the creation of the petrodollar. But this price collapse initially was fueled by a price war between OPEC producing nations, including Saudi Arabia, Russia, and the United States. Each country was producing at levels pre-corona crisis, right in the middle of the crisis, meaning supply was way higher than demand for the first quarter of 2020. Well, finally, the oil-producing roundtable players came to an agreement to cut supply, and stupid, let me tell you, stupid media players were calling to an end of the price war. Fortune magazine, Saudi-Russia oil price war ends with OPEC plus deal to slash output, but prices stay near lows. In the article, they say, the world's top oil producers pulled off a historic deal to cut global petroleum output by nearly 1/10, putting an end to the devastating price war that brought the energy industry to its knees. Well, its knees was at $20 a barrel, and I guess the energy industry now is flat on its back with a look of fear, shock, and maybe a shed of a tear or two. And you know why they are flat on their back? Because even the top government officials here in the US focused on the oil and energy sector didn't see this freaking come in. Dan Brouillette, US Energy Sector Secretary, spoke to interviewers after the historic oil deal on April 15th about prices and the markets. Let's hear what he had to say now.
I think there has been a lot of focus over the last day or two with regard to prices. I have suggested many times in the public domain that think about what would have happened in the alternative had there been, instead of a cut of 10 million on the part of OPEC and OPEC plus, what if that number had been zero? What would we be looking at today? I'd suggest that it's probably something much lower than where we are. I think we may be at a floor. And I think the intent of this conversation with OPEC and the rest of the G20 countries was simply to do exactly that, to mitigate, stem the tide, stem the damage that was being done in the marketplace over the course of the last 30 days or so.
Are you disappointed that we didn't see more of a price bounce?
No, I don't think that was the intent of the conversation, at least with regard to the United States. I think everyone wants to see pricing that supports the strong energy industry. I don't want to suggest that pricing isn't important or is completely irrelevant. But I think it was more important for us to stem the losses that were occurring all throughout the marketplace as a result of some of the activities, the loss of demand as a result of the pandemic, other factors. It's just very important that we not allow the market to continue down to what could have been single-digit numbers for the price of a barrel of oil.
Yeah, we are to that single-digit level, folks. I mean, not even $9. We're down below $2. And those U.S. officials didn't see it coming. Not even the Trumpster himself or his energy advisors. But of course, the Don decided to take credit for the historic deal. This is what he tweeted. The big oil deal with OPEC Plus is done. This will save hundreds of thousands of energy jobs in the United States. I would like to thank and congratulate President Putin of Russia and King Salman of Saudi Arabia. I just spoke to them from the Oval Office. Great deal for all. Well, at these prices, it's not going to save Jack McScooty booty jobs here in the US. So because of the deal, aka the art of the deal, US oil production now has to be cut almost 2 million barrels per day up past 2021, as all nations agreed to cut some, including the US. And guess who is being cut out of all of the deals globally for oil right now? The United States. This Reuters article posted yesterday tells it like it is. Saudi Arabia gets physical with Russia in underground oil bout. And from the article, beyond the cooperative statements, the fight is still going on, a source at a trading firm told Reuters, adding that Saudi Arabia's official selling prices, OSPs, signaled that the kingdom was targeting the Asian market, where demand remains relatively resilient during a global slowdown. What did they target? Well, Saudi Arabia's state oil company, Saudi Aramco, cut its selling prices to Asia in May by $3 to $5 across all of its grades, marking a second month of drastic cuts. And other OPEC members, Iraq, the United Arab Emirates, and Kuwait slashed May prices on crude destined for those Asian markets. And guess what? Russia has relied on the Asian markets as a destination for its oil output since launching the 1.6 million barrel per day ESPO pipeline, and this connects Russian fields to Asian markets through the port of Kozmino. Uh-oh, Vlad, what else is coming at ya? Well, Saudi Arabia is also gaining ground in Europe, Russia's backyard for oil and gas exports. This month alone, barrel sales to Europe have exploded to levels not seen since the last oil war in 2016. But back to that Reuters article. In it, they say, in an effort to further entice buyers, Aramco has offered refiners in Asia and Europe the option to defer payments for crude cargo deliveries by up to 90 days. But then they say Russia's main advantage in the physical market fight with Saudi Arabia is its sprawling pipeline network, helping it place oil at cheaper rates compared to its rival, which has to find tankers and pay for transportation. So what is the common theme in everything globally regarding all these deals? It's Russia, Saudi Arabia, and OPEC members. There is no mention of the US cutting deals, gaining market share, or anything like that. Why? We can't produce and sell at these levels. It's impossible. And that is why you see all outlets covering the news like hell here in the US. They know it's huge, they know it's dangerous. Bloomberg posted this article, oil plunges below $5, with traders fleeing expiring contracts, which tells us oh so much about the pain here in the US. From the article, there is little to prevent the physical market from the further acute downside path over the near term, said Michael Tran, Managing Director of Global Energy Strategy at RBC Capital Markets. Refiners are rejecting barrels at a historic pace, and with the US storage levels sprinting to the brim, market forces will inflict further pain until either we hit rock bottom or COVID clears, whichever comes first, but it looks like the former. So the US can't get rid of their frickin' oil, boys, and more from that article. There are signs of weakness everywhere. Buyers in Texas are offering as little as $2 a barrel for some oil streams, raising the possibility that producers may soon have to pay to have crude taken off their hands. The spread between the nearest two contracts for the US benchmark has fallen to its weakest level on record. In Asia, bankers are increasingly reluctant to give commodity traders the credit to survive as lenders grow even more fearful about the risk of a catastrophic default. So scary, right? But if you guys have never heard of Cushing, Oklahoma, you should. It's a key crude oil storage hub for the United States, as it's a physical delivery point for the West Texas Intermediate Oil Futures contracts. Well, since February, capacity has surged by 48% to 55 million barrels, which is pushing 100% capacity, which is 76 million barrels. And you would think, okay, the US is storing its own crude oil, right? The stuff produced in Oklahoma, the stuff produced in Texas, and other US states. You are actually completely wrong. We are taking in a bunch of Saudi oil too for some reason. Shipments have soared from an average of 396,000 barrels per day in February to 829,000 barrels per day in March to 1.46 million barrels per day in the first 2 weeks of April. That means over 30 million barrels in a month. Nothing like before. What is going on? Why are we helping the Saudis with oil when oil companies here in the US can't get a break? Well, Trump's part of the deal was a complete and utter failure. We bought oil and increased imports when hands down it was the worst decision our administration has ever made. They thought prices would rebound for some gosh dang reason, and buying at the low prices, $20, was a chance in a lifetime. Wrong. You could have got it for a lot cheaper. So you guys, something is not right. Something is not correct in the markets. Oil is the leading asset. It's what gives the petrodollar its power, and it should definitely have an effect on other markets like stonks. I mean, oil price is an indicator of the health of global supply chains, of which corporate consumerism relies on, which we can see oh so clearly in March. You know, oil got hit first and went down, followed by the stock market. The two were correlated like they should be, but now all of a sudden stocks are hanging on while oil has crashed to basically nothing. It has me scratching my head or hat. So my friends, tread lightly, tread softly, and be aware of all markets, crypto included. I know I said buy BTC because that is something I am always doing. Short term, a crash in oil will ripple into all markets, from real estate stonks to the USD, and it will hit Bitcoin, Ethereum, and all of the crypto markets. But like I have been saying, for Bitcoin to rise, it needs to be like a phoenix and rise from the ashes of Finance 1.0. Cheers. I'll see you next time.